Lehman Brothers, once the fourth biggest investment bank in the U.S., it filed for bankruptcy a decade ago, marking one of the key moments of the 2008 global financial crisis. How has it affected Korea's market and what has changed since then? Hyesung provides an in-depth analysis.
September 15, 2008, U.S. investment bank giant Lehman Brothers went bust. The ensuing financial crisis marked the worst global recession since the 1930s.
We saw market turmoil reach a new level last week and spill over into the rest of the economy.
Global stock markets plunged. Korea saw its KOSPI index fall below the 1,000 mark. The local currency depreciate to 1,600 won against the greenback, and a foreign capital outflow of around $26 billion by the end of the year. Korea's benchmark KOSPI is now at the 2,300 level. In the last 10 years since the global financial crisis, foreign investment into Korea has increased by $177 billion. Plus, unlike back then, Korea is now a net creditor country.
In 2014, Korea became a net creditor, meaning foreign countries owe more to Korea in the form of stocks and bonds than vice versa, lowering Korea's debt risk. At the same time, foreigners doubled their purchases of Korean bonds compared to 2008, a reflection of the country's higher credibility and better fundamentals like the current account surplus.
Korea has also signed new currency swap deals and doubled its foreign exchange reserves, increasing its buffer against external financial shocks. All these are good numbers, but Korea is not totally free from the shadow of the financial crisis. A $700 billion U.S. government bailout, Europe's quantitative easing, and rate cuts led to huge borrowing. As of the first quarter of 2018, global debt reached a record $247 trillion, and the debt-to-GDP ratio has exceeded 300%.
Record monetary easing has resulted in global growth fueled by debt. At record low interest rates, Koreans invested in houses. Household debt doubled, coming to $1.3 trillion this year. As the U.S. gradually lifts its key rates, this adds pressure to rates in Korea and hurts households' ability to repay their debts, which could result in a mortgage crisis.
A decade after the global financial crisis, Korea has come out stronger. But with emerging markets like Turkey and Argentina falling into a currency crisis, an escalating trade conflict between the U.S. and China, and ballooning domestic household debt, experts warn that Korea can't yet let up its guard. Hyesung, Arirang News.